Hello everyone, my name is yuriy.nesvit. I'm with the XP Realty and I'm a friendly neighborhood realtor in Hamilton and surrounding area. Right now I'm actually going past Brantford, close to Delhi, so it's about 60 kilometers away from me, but business is business. So today I wanted to talk about credit score and how to qualify for the mortgage. So if you're looking to purchase a property, this episode is for you. Many times and many people I've heard from, they come to the bank and they go, well, you don't qualify. And sometimes they don't even know, they don't tell you exactly what it is. And it could be different stories as well. Bank has different policy, all kinds of different things. What really bank is looking for. So first of all, they look at your credit score. If you're new to the country or didn't have the credit cards before, that might be an issue. Because, if you have only one credit card, and this is a common mistake that people make. Oh, I have my credit card and it sits at zero all the time. I'm good, and you might be surprised that your credit score is quite low because it might be sitting at 650, 680 or something like that, but it could be at 800 in no time because simply you're not using your credit. Banks love when you're using the credit card and loans and car loans and so on and so forth. If it's just sitting dormant there, then it's not good for you. And the other thing, if you have a credit card that's sitting at zero balance and you use it once in a while, and people say, well, I don't need it, I'm gonna cancel it. Very wrong move, because whatever the limit you had on that, let's say you had 2,000 or 5,000 limit on that card, that limit is going to be deducted from your total limit that you can borrow, and there is such a thing as that called utilization ratio, which is it's going to be the difference between balance and the limit. So total balance and total limit. So if you reduce your limit, of course your ratio is going to go up, and if your ratio goes up by more than 50%, it's going to affect drastically your credit score. So if you do have a credit card sitting doing nothing, kind of in limbo, don't cancel it, just keep it. You can cut up the card so nobody can get access to it or something like that, but don't cancel the card. Make an occasional payment through that card so it's still active and stuff. Well, first of all, when you start in your credit history, you have to have two credit cards or two lines of credit, because the bank looks at it and they want to have the more the merrier, but the two is sufficient to start, and they want to see good credit history on both cards, and that kind of starts the credit history going. Once you have those two cards, the most important thing, you should not miss the payment. Even if you're in a tough situation where you cannot pay off your $300 or $500, whatever the amount might be, pay the minimum, pay $10, pay $15, whatever that minimum payment is, pay that, and your credit score actually going to be improving. I've seen it in my own case where I have very high utilization, paying minimum payment, and my credit score goes up, and they're still offering me a higher limit on the credit cards, which again, like I said before, improves my credit score because I get more access to cash. That's kind of very important. Like I said, do not miss the payment. Pay the minimum if you have to. Ideally, you want to pay off on a monthly basis, or as soon as you make the payment. There's another trick I'm going to tell you later on, how to improve your credit score much faster. If it's or you're building credit score, you're rebuilding it. You had some issues before, so this is how to do it. But I'll tell you in a second. So basically, like I said, do not miss the payment, because if you miss the payment or do not pay the creditor, your credit score will reduce drastically, and you can miss one payment and it's going to reduce by 40, 50, 60 base points. It's going to take you 3 to 6 months to rebuild it again. So this is very important. Do not miss the payment, or even worse, do not pay at all. And if you don't pay 1 month is one thing, but when you stop paying and don't pay for 2 months, 3 months, 4 months, 5 months, and 6 months, and so on, eventually it's going to go in default, and they're going to call that card or call the loan, and basically that card is going to be written off, and it's going to go on your credit score, a credit history, and it's going to be sitting there for a number of years. So if you're not paying, that's even worse, right? I'm going to touch on, I guess, bankruptcy and credit proposal maybe next time, but this is another good subject. So, as I promised, how do you improve your credit score or build it faster? I mean, it's been a couple of years since we tried that, or since we were told how the system works. I mean, they might have changed something, but this is something that they came from the Equifax employees, and this is what they told me. Basically, what you do, you have to make several payments or multiple payments. When you make the payment, the system thinks that you making a monthly payment. So, for example, you're paying $20 a day, $200 in over 10 days. The system thinks that you paid 10 months worth of payments, not 10 days, not 1 month, but a 10-month worth of payments. So it's kind of improves, it's the longevity of the relationship matters, right? So you kind of take that into consideration. So like I said, when you make 10 payments or 20 payments or 30 payments, your credit score goes up much faster. You don't have to wait 6 months or a year until you build a credit score, credit score and credit history. That's how you improve your credit score. The only negative might be that you may get a call from a credit card company saying, what are you doing? Why are you paying $20 every day or something like that? I just simply say that you're rebuilding or building your credit score. Simple as that. Nothing wrong with that, because sometimes it could trigger their suspicious transaction something's going on. But I mean, when you're making payments is one thing. When you making the same purchase time over time every day, it may get suspicious, right? So that's kind of in a nutshell what I wanted to talk about. About the credit bureau. There's other things on a credit bureau that you want to pay attention to. And then the other thing, before you even apply to a bank, I suggest you Google yourself and find out what's out there, because there's always fraud going on, where somebody could be using your name and buying stuff under your name, or maybe making derogatory statements or doing something wrong, and you are not aware of it, but your name and it comes up, right? The other thing is if you update your employer, update your address, so everything is coincides with what you have on a history with the credit bureau, to avoid unnecessary questions, basically. That's it for today. My name is Yuriy.nesvit. I'm with the XP Realty, and I'm a mortgage broker also. So if you did like the video, please like and subscribe, and to get notifications for the new videos. And I'll see you next time.